Good day to you all YouTubers and welcome to Real Turkey channel. This is your presenter Atilla Yeşilada speaking from sunny, beautiful Istanbul, but it's of no use to me because the outbreak is so bad I have decided not to leave my house until 2025. So for 5 more years I'm just gonna watch the sun out from the window. Turkey is just such a fantastic country. Fantastic not in the sense of being extraordinary, but fantastic being, something created by fantasy that I could shoot a video every day. And I think I will because I personally have nothing else to do with the rest of my life. Let me give you an example. Today, our all-knowing government uh, stopped or banned alcoholic beverages, liquor sales on weekends when we have a curfew to slow down the spread of the virus. How a ban on alcoholic beverages help reduce the infection rate or the spread of the virus remains a complete mystery. But this much is clear. There are 150,000 convenience stores called tekel in Turkey, which sell liquor and as well as cigarettes, you know, peanuts, I don't know, whatever you need in a 7-Eleven. They were already very stressed because of the lower volumes and turnover, and now they're going to shut down. So this is actually a clandestine effort to stop alcohol consumption in a country where alcoholism is not a problem. We don't have too many alcoholics in this country, unlike Europe or the United States. It's one of our, you know, features which distinguishes us in a positive sense from the developed world. Alcohol is consumed casually. There is another fantastic decision. This one slightly more important because it may destroy the economy completely. And that's what I'm going to be talking about today. We have a banking regulator called BDDK or BRSA. In the United States, I think it's Fed, which regulates banks. But in Turkey, that job falls not upon the central bank, but on BRSA. They have decided to pass a regulation to force banks to uh, defer non-paying loans for 6 more months on account of the epidemic. Now, the amount of loans to be deferred are TL 360 billion liras, or roughly $50 billion, which is small fry for a developed country, but that's 10% of the Turkish total loan volume. And I want to explain to you why this kills the Turkish banking system. But first, a few words on commercial banking for the members of my audience who are not very familiar with the financial industry. In Turkey, the commercial banking system is sort of the arteries of a body. And money, or people's savings, is the blood that runs through these arteries and goes to the cells, which are the individuals who are in need of loans or private sector companies, as well as the government, which borrows heavily uh, from the banking system through issuance of government bonds. So if this artery is clogged somewhere or pops out, or if the blood is poisonous, the entire economy dies, just like the body dies. This is why it's crucial and essential to protect the safety and insolvency of the banking system, as well as making sure that all loans and other assets are properly accounted for. This means if a loan is tardy, it should be classified as non-performing, and the bank should make provisions and set aside liquidity and capital for the eventuality that the loan will not be repaid. Now, BRSA says you can defer 10% of the loans in your portfolio for 6 more months with no sort of thing like that. You don't have to worry about provisioning or capital adequacy or anything like that. Just, you know, defer them. Of course, this would have made some sense if in 6 months Turkish economy will have recovered to a position where the borrowers of these loans will have the wherewithal to pay back the loans. But they won't, because these loans are being deferred a third time. Also, there are massive restructurings going on in the Turkish banking system, which signals that even the large corporations don't have the money to pay back their maturing loans. And most importantly, Turkish savings ratio is one of the lowest in emerging markets, which means that if you are freezing money in these non-performing loans, the new money coming into the banking system through deposits is not sufficient to replenish the lost water in the pool, which means that by deferring dead loans and the reckoning time, actually, BRSA is reducing the liquidity of the banking system, thus making it more difficult for the banking system to discharge its main duty, fundamental duty of making loans to those who really need it and who can make a profit out of it. Finally, of course, since this is a blanket regulation to defer all loans for 6 months, it also rescues zombie companies which really cannot survive even if it weren't for the COVID-19 crisis, simply because their business models are outdated or because their industries are dying. So the Turkish banking industry is increasingly resembling the Japanese banking industry in the 1990s, where dead loans were allowed to float, and as a result of which banks couldn't make any new loans, and Japan entered a deflation, which hasn't yet ended today. Or the Italian banking system, where there are hundreds of billions of euros of bad loans, which Italy simply can't work out because, the load is so big. And this is how this fantastic story is going to end. And it's such a shame because Turkish commercial banking system was one of the stars of the emerging markets. It was extremely well and efficiently regulated until Mr. Erdogan became president. Turkish banks were banned to take off-balance sheet risks. That's risky positions in derivative assets, structured loans, etc., which usually leads to failure or insolvency in other countries' banks. And they were made to adhere to capital adequacy, liquidity, and other rules dictated by the World Banking Regulations very closely, or they would be penalized heavily. Turkish banks had a capital adequacy ratio of over 15%, sometimes 18% of total assets, which is something like a record among emerging markets. Now, of course, they still have a capital adequacy ratio of 18%, simply because they are not allowed to write off dead loans. If you pretend a loan is alive, even though if it is not paying any interest or the principal at maturity, your capital adequacy ratio looks better than usual. What really surprises me is that the news of BRSA about to unveil this regulation led to a massive rally in banking stocks in the Istanbul Stock Exchange. Why? And some investment banks, which I shall not name here because if they sue me, I'll be bankrupt, also recommended going overweight in Turkish banking stocks. And they specifically mentioned that this is the reason. Great, their profits will not be impaired. Yes, it won't be, simply because they are reporting paper profits which have no correspondence to the reality. In developed countries, there are methods to get rid of your bad loans. You sell them to collection agencies, and then they sue the firms or the individuals and collect whatever they can. In Turkey, the market value of such sold loans is roughly 5 cents on the dollar. So it is reasonable to assume that out of 360 billion liras or $50 billion, 95% is actually lost. And bankers among you would know, the longer you defer a dead loan, the more it stinks. It's like with corpses. The longer you defer a dead loan, the lower its recapture value or market value. So this is really a goodbye to the Turkish banking system and subsequently to any hopes of growth in the Turkish economy, because modern economies need finance, a vibrant dynamic, and efficient banking system that allocates credit. We no longer have that, and we owe that to BRSA, which, by the way, I mean, I use BRSA, but obviously it's orders from the government. So one of the few functioning parts of the Turkish economy has just been convicted to death today. These are cheerful news from Istanbul. I am your presenter, Atilla Yeşilara, who shall no longer be able to consume alcohol over the weekends. So he is deliriously euphoric today. I wish all of you a safe day. Please stay home unless you have to go out, because the virus is really bad. And today, the global death count has exceeded 1.5 billion. Until you get a vaccine, better stay home. Atilla Yeşilara saying goodbye from sunny Istanbul.